for joining us for this episode. We have a really great guest. I've actually been wanting to speak to him for quite some time. Zac Prince. He's the CEO of BlockFi. I'm sure everybody's heard of it. Huge in the borrow lend space in crypto and taking it by storm, might I add. I'm joined by my co-host Ryan Gorman, best hair in crypto, and coming to us out of El Paso, Texas, I got Rob from Digital Asset News. Most of the viewers know him. He's on quite often and definitely adds a good point of view to everything. So Zac, thank you so much for joining us, man. Really appreciate it.
Thanks for having me, Alex, and I appreciate the warm intro, and I can assure you that not everyone knows all about BlockFi because Rob told us right before we started recording that he's still trying to figure out what we do. So happy to be here to educate and talk about all the goings on in crypto with you guys.
Well, I mean, hopefully by the end of this, everybody does know. I mean, listen, you guys are a storied firm right now. You've been a darling for the last year and a half since you entered the space. Full disclosure, our firm, Bequan, is a client of yours and a very happy one at that. But, you know, the first thing that we usually like to dive into with guests is, how did you start? How did you get into crypto? Like, how did this become a paycheck to you? Because the regular average Joe is always like, how does Zac Prince, like CEO of BlockFi, what happened there? There wasn't a job opening, you know? So if you could kind of give us a story on the travel down here, that would be great, man.
Yeah, sure thing. So I grew up in Texas. So I was, Rob's neighbor growing up. And after I finished school, I moved to New York and I worked at a couple different venture-backed technology companies. So my professional history has a little bit of ad tech. Prior to starting BlockFi, I was in the fintech world, specifically the online lending side of fintech. And I was very familiar and comfortable with, starting something new and having to build the first product. And after you build the first product, raising some money from investors and then building another product. And so that's just kind of the world that I came from. And while I was working in the fintech space, this was back in like 2015, I bought cryptocurrency for the first time. Originally, I bought Bitcoin after it had gone from 1,000 down to 300. And I sold it like a month later because the price doubled and I thought I had made this incredible trade. And then I bought more Bitcoin at a higher price at a later date. And then I bought Ethereum relatively early too in 2016. And then early 2017, as excitement started to build around the space and the prices started to go up, I just got really excited about it. I couldn't stop thinking about it. I'd gone down the rabbit hole in 15 and 16. And I, was talking about it a lot at home with my wife. And she at a certain point was like, I don't want to talk about cryptocurrency. So you should go meet some people to talk about cryptocurrency too. And I started going to a few meetups in New York City. And then I started thinking maybe I should get involved in this space full time. It feels exciting. It feels like a really big industry is about to be built, and it could be an industry that has a really positive social impact on the world. So exciting, not only from a capitalist perspective, but also from a feel-good perspective. And I asked someone at a meetup, hey, do you think it would be a good idea to build debt and credit or kind of lending products for the crypto space? And they were like, absolutely. You should get started, like yesterday, basically. I went home and I told my wife that someone thought this idea that I had to build debt and credit markets for the crypto space was a good one, and that I wanted to leave my fintech job and try to pursue it. And it took her a weekend of convincing, but she eventually said yes. And then I started the company. We started in the middle of the ICO boom of 2017 and the general bull market of 2017. And then we raised a seed round about 6 months later and started building products and growing our team. And here we are.
That sounds, so much familiar to how I got into crypto. I had been doing some consulting work in and out of it since back in 2015. But during that ICO boom in 2017, I was going to like the Crypto Mondays meetups in the city and all these other meetups. And it took a real hard sales job to convince my wife this could be a full-time job, starting going out and being on my own. But I mean, clearly it worked out for you. It worked out for me. I think it's definitely for the better. I'm sure I'm much happier. I'm guessing you are too. Yeah.
I mean, not only have I enjoyed building a company, but I really enjoy being in the crypto sector where there's just nonstop excitement and the potential for disruption and the potential for growth as an asset class and as an industry is so huge, and you don't get that a lot. Um,
No, no.
a lot of industries kind of emerge and then grow for a handful of years, maybe, especially in financial services, and then they kind of peter out, or traditional folks do them too. And I feel like we're still so early in crypto, and we're already at hundreds of billions of dollars in asset value and tens of billions of dollars in company value that's been created so far, but it still feels like the first inning. And I've gotten to learn about so much stuff. I mean, I had never had exposure to derivatives in my prior time in fintech. I had a lot of exposure to different credit structures and securitization and different types of private fundraising and capital markets. But I've learned a ton. I've built a great team, and we have some new exciting stuff coming out very soon. So it's it's been a good time so far. And I mean, thank goodness we all work in a completely digital industry.
Oh, thank God.
Given what we're going through, as a society right now.
Yeah, no, for sure. I mean, you touched on two good points earlier. One was how you bought Bitcoin, at one low price and sold it at a higher price, but still a low price. A lot of people don't realize how many OGs that they look at the Charlie Shrams and those type of guys, and they're like, man, that dude was in it when it was $12. Yeah, they don't understand that they sold it for $20 and they had to buy back in because you didn't know where it was going, right? Lending is such a particular niche in any space, traditional or crypto. When you decide to get into it, I mean, crypto lending was new, and I'm not talking, I mean, really new. That had to take some real big planning. You didn't have any historical market analysis to kind of base what your roadmap was going to be. Were you nervous?
Yeah, I think we were nervous. I mean, the hardest thing, honestly, was we incorporated in August of 17. We closed our seed round in December of that year, and raising the seed round was the hardest round of capital for us to raise for, I think, a couple of reasons. Number one, we got the question from a lot of folks of, crypto is brand new. Do people really want to borrow against their crypto assets? Like, how big is that market? It can't be that big. And number two, we kind of took a position early on that we wanted to, because we saw this work in other sectors of fintech, we wanted to be, regulated and licensed and put the company in a position to raise institutional capital over time. And as a result, we weren't doing an ICO. And this is when ICOs were, ICO back then was kind of like DeFi now. And so people were telling us that we were complete idiots for, not doing an ICO because it was the future. And we're like, well, maybe it is for some stuff, but we don't think it makes a ton of sense for our business model. But then after we got the seed round done and we, launched the product, we really just iterated based on feedback from our clients from there. And once you're able to get in market and start doing that, and if you can, build a team that's capable of constantly iterating not only on your existing product, but also that's capable of building new products, you just have to listen. You just have to listen to what your clients want. And if you're in a market like crypto where there's a lot of, embedded growth and volatility and new things happening all the time anyways, you can go a long way.
Oh, absolutely. And I think that was a really smart move, not doing an ICO, because look how so many of those panned out. You want it to be regulatory compliant, and a lot of those have now since come back and seen enforcement action against them. So
he sleeps at night, Ryan.
Absolutely. That was one of the things you could have done back then for sure.
Yeah, it was wild. I mean, look, I think the analogy is very clear in my mind. I mean, back then you had unknown people, sometimes, completely pseudonymous people throwing up a splash page website with an Ethereum address saying that they were running an ICO, and there'd be 10, 20, 30 million bucks worth of value sent to that contract in exchange for some tokens that people, may or may not get in the future. And you're seeing a similar kind of level of excitement, and I think a little bit of irrational exuberance. It's cooled down a bit over the last week or so. But with the DeFi space, pseudonymous founders copy and pasting some, code to run a smart contract based lending protocol. They create their own token that has some governance rights, maybe defined or maybe not, and the market goes wild over it. But we're seeing that deflate a little bit.
Zach, you're telling me you don't own sushi?
I can say that I haven't personally, and we certainly haven't at BlockFi done anything material in the DeFi space. We've done a little bit of R&D on it, but we're not the type of risk return seekers where we would factor in a highly volatile governance token into our expectation of performance of a certain lending action that we were taking. So we haven't gotten there yet, but that's not to say that I don't see a ton of promise potentially coming out of the space over time. And it's not that we aren't, very actively monitoring it. And we have, tested out a couple of things at super small scale. But we're more interested and more focused on building products that connect to the traditional financial system. So we're launching tax loss harvesting soon. Obviously, you need to have a bunch of tax stuff built into your product for that. We've recently launched ACH on and off ramps and wire on and off ramps. We're launching a Bitcoin rewards credit card early next year, which you need, partnerships with Visa and a bank and a payment processor for. And you can't get those things if you're not able to say, here's who the principals of the company are, here's how much money we have, here's how we're regulated, and really be kind of a, open book that can be scrutinized by another regulated financial institution in terms of potentially partnering with you.
So you're not with pictures of celebrities as your board members and advisors, right?
Well, Anthony Pompliano is on our board, so he kind of toes the line between investor and celebrity, but that's as close as we get to celebrities involved in it.
I'll tell you, the tax loss harvesting part of this is really going to be attractive to traditional hedge funds that kind of want to get into the space, because on traditional side, that's it's a niche but very big deal for some of the hedge fund strategies out there. So I think that might be opportunistic. Rob, I know you're dying to ask a few questions, so we lend the floor to Texas.
No. So thank you so much. Here we are, El Paso, Texas. No, so one of those things when you talk about tax loss harvesting, so there's other different products out there that can do these types of things, but if you have everything under one umbrella, it's a pretty smart move, right? It's like a one-stop shop. I think if you can do these types of things, it's going to lend itself to be like, well, I can go over to this site to do this, and I go over to this side, do that, and this side, do that, and that will be okay. But if I have everything there, it's kind of like, why do I have to leave? It's a pretty smart move. But
yes,
Zach,
the analogy I make in my head is that, a lot of us have kind of like a primary banking platform where we have maybe our checking account and our savings account and a debit card and a credit card, maybe also a mortgage. And then you get, mail from a competing bank offering you $100 or $200 to open a checking account with them. And it's not that, free $100 or $200 wouldn't be nice to have, but it's just too much of a pain in the butt, and stuff isn't broken on your existing platform. So, we're definitely aiming to add kind of that level of value to our clients where they spend their cash on the Bitcoin rewards credit card. Every month they're earning Bitcoin just based on how much they spend. That Bitcoin goes automatically into their interest account, or they're earning a yield on it. With the other assets that they have on our platform, they can trade across assets anytime they want to. And if they ever need to access some credit and borrow long-term capital at a low rate, they can use the value of their portfolio as collateral for that credit line. So, and then there'll be some other stuff over time, and then tax loss harvesting built in too, right? As you're buying more, or if you're buying crypto for the first time, if the price goes down a little bit, there's no reason why you shouldn't sell it and instantly buy it back to capture that tax loss and save yourself money, at the end of the year when you're paying Uncle Sam or calculating your refund check, whichever way it goes.
Yeah. Yeah. There's
Yeah,
no,
and you know, to what Rob was saying with a one-stop shop, that it's a relationship, it becomes a relationship-based business. So, you know, I'm sure over time, you know, your team gets to know your customers that have become very loyal to BlockFi, and it gets a little more intimate. You get a little more comfortable. It kind of de-risks you guys as well, having those long-term, deep relationships. You know, you guys have, you talk about the seed round that you guys raised. You then raised an A round, but then you raised a B round for 30 million bucks, I believe, in January. Heavy hitting investors. I mean, I think Peter Thiel was part of that 30 million. You raised another 50 million just not so long ago. I know Three Arrows was a part of that. I don't know the whole list of investors you guys have as partners, but I mean, there's a lot of high profile guys that believe in what you guys are doing, your model. Peter Thiel doesn't just write checks. He's gonna ODD you guys, and he's gonna say, listen, how's this process gonna work? How are you guys handling risk and compliance and so forth? I mean, how do you feel with those type of partners, you know, not just from the money standpoint, but from an informational standpoint? You know, a lot of smart guys in that group.
Yeah, I mean, frankly, it's really nice to be able to leverage some of the folks we have around the table, whether it's Valar Ventures, who's affiliated with Peter Thiel, or Fidelity, or Susquehanna, or Coinbase Ventures, or the Winklevoss brothers, who've also invested.
Winklevi, we refer to them as the Winklevi.
Winklevi.
I love Cameron Tyler.
There's also some, you know, proprietary trading firms out of Chicago, CMT Digital and Acuna Capital and Kinetic Capital, all of whom have, you know, been really helpful as we've gone along this journey. And you kind of learn, you know, what things you could ask certain people for, right? Like, I mean, Anthony Pompliano and Morgan Creek has also been a big part of the story. And if I'm looking for, you know, some feedback on our digital marketing strategy, I don't bring that to, you know, Peter Thiel and his team. I bring that to Pomp. If I'm looking for feedback on our, you know, risk management as it relates to certain types of market activities, we bring that to Susquehanna. If we're looking for an institutional perspective, we can go to Fidelity. So, you know, it just helps to be able to have these folks on your team and be able to leverage them for introductions or advice, depending on what's going on.
Yeah, and I mean, the names that surround you now are a big difference from, you know, let's call it 2 years ago or 3 years ago, and that really says a lot about what you've built so far, Zac. And you know,
not to interrupt, I think I want to apologize. I think I cut Rob's question off completely unintentionally with my analogy earlier, so we should give him a chance.
No. Well, I was going to go into, because Alex is going to talk about the institutional side and all the different things that go along with that. So for me, it's all about the retail side. So when we first came on, you know, the question I always had was, I mean, tell us, really, I was going to go to, you know, tell us about BlockFi, tell us all about it, how it all works, and also tell us how it compares to others out there. So we can go into that now, or we can go back into that.
No, sure. So, I mean, look, we were originally known for our mission of providing debt and credit products to crypto investors. So everything that we have today is available in our mobile app or in our web app. We're based in the US, backed by incredible investors. We have a 250-person team around the world. We might be the only place in crypto where there's a phone number that you can call and, you know, during normal business hours, talk to the client service team and ask them questions. There's a bunch of smart people on that team. And the products that we have today are an interest account, which is our most popular. So you can earn 6% yield on your Bitcoin, 4.5% yield on your Ethereum, 8.6% on stable coins. And it's super simple. Assets that are held in our account accrue interest every day. And then once a month, it gets, your balance gets updated with how much interest that you've earned. And then you're earning interest for the next month on your new larger balance. So the interest compounds. You can trade, so you can buy and sell any of the assets that are supported on the platform with no fees. And you can get a loan secured by the value of your assets on the platform. And the way that we try to differentiate ourselves, aside from being kind of the most institutional quality or most reputable market participant that has these products available, is on price and customer service. So we think you could stack our rates up against anybody in the industry, and they would look top tier compared to similar products on other platforms. And as I alluded to earlier, we're here to help folks every step along the way. So if anybody ever wants to talk to us over the phone or email or chat, we've got a great team here to support you with any questions that you might have.
Those interest rates, I think, sorry, Rob, those
Go ahead.
from a retail standpoint are really attractive. And I know a lot of competitors do have like account minimums. Is there any condition on accounts at BlockFi in terms of earning interest on your holdings?
No, so there's no minimum balance requirement. You do have to go through KYC, so you'll have to tell us who you are and verify your identification in order to get it on the platform. That's because we are regulated in the U.S. at both the federal and state level. You also, you're able to do one free withdrawal per month. So you could come in, deposit money via cryptocurrency payment rails or a wire transfer or ACH, earn interest, withdraw off the platform and never pay a single fee.
Nice.
Yeah. Go ahead, Rob. Sorry.
So no, it's okay. So Zach, is there any kind of lockup period? Does it have to be like this? Okay. So that's one of these big things, because out of all the different ones that we've seen, all the different exchanges and wallets and DeFi, those other things, there's certain issues that always come up. One of the fees, for trading, whatever they are, right? Another thing is like what Ryan was just talking about, it's like, how can we get these off? And another thing that has come up in other places is, can I take the cryptocurrency that I have bought, that I have purchased on BlockFi, can I take all of those assets off at some point? Or is it a certain, not amount, but type that I can take off? Like I can take off Bitcoin or Ethereum, but you can't take off Cardano and Chainlink and whatever else.
So right now we have 3 supported cryptocurrencies: Bitcoin, Ethereum, and Litecoin. We also support PAXG, which is like a gold-backed token. And then we have 4 stable coins: USDC, GUSD, PAX, and Tether. All of those assets you can send in and take out.
Okay.
And if you send in, let's just say $100 or 1 Bitcoin, and then the next day you want to take off 1 Bitcoin or $100, you could take off 1 Bitcoin and $100. What will happen in that 24-hour period is that you'll be earning interest. So when you withdraw those assets, you'll see some accrued interest in your account. That accrued interest will be paid out on the first day of the next month. So actually, you would have to then come back to the platform and withdraw your interest in order to get everything. But we're never locking up, we're not locking up some amount of your funds or anything like that. But until interest is earned, it's accrued, and it's just earned once a month. That's like the payout cycle. Similar to a savings account. I mean, they don't show you how much interest you're accruing while you're accruing it. But if you withdraw money from a savings account on the 15th and they pay interest on the 1st, you don't lose the interest that you earn from the 1st through the 15th of the previous month. And our platform works the same way.
So I saw earlier this month you guys secured a money transmitter license in New Jersey. I guess how many states are you currently permitted in a similar fashion that way? And as those types of transfers, are they limited to those states that you have the license in?
Yeah. So so there's a bit of nuance here. So depending on the state,
there always is, Zach.
I know. So depending on the state, we hold either lending licenses or money transmission licenses or both.
Okay.
In some states, like California, for example, you can use everything that we have. You can send money in from your bank account. You can trade. You can get loans. You can do it all. You can earn interest. In other states, like New York, you can't do very much right now. You can only get a loan in New York. You can't trade. You can't earn interest. And in most other states, you can trade and earn interest. There's around 15 states right now where the moving money in and out from your bank account isn't available yet. So Texas, actually, for example, you're not yet able to move money in and out from your bank account, but crypto rails are totally fine. Earning interest, trading, loans, all available in Texas. And we should have the licenses in the other states soon. It's all just a function of how long it takes us to go back and forth with the regulators and get the license. You mentioned New Jersey. I mean, we've probably received 2 to 4 licenses per month for the last 6 months, and they kind of just come in cycles. And some states slowed down quite a bit with COVID. The transition for government agencies going from being in person to fully remote isn't as smooth as it is for folks like us who are a bit more used to Zoom calls and stuff like that. But yeah, there's a page on our site, blockfi.com/rates, where if you scroll down on that page, you can see product availability by state.
What about Pennsylvania? I'm moving to Philly in 3 weeks. So.
We're all good. I think we're all good for everything. You can wire money, ACH money, trade, all the stuff.
In.
Yeah.
Sounds good.
Rob, I mean, you analyze this part of the landscape so much. I hear you talk about it all the time. I want you to really just ask away, like, all the questions you think, the retail folks and what they want to know and stuff like that, man.
Let me get on my list.
I knew Rob had a list. He's like, because Zach's coming on. I got a list.
No, because Zach's got nothing else to do. No, but yeah, exactly. Well, the reason why I have all these questions is because everybody who's on my channel, I mean, I get bombarded with in the comments section. I try to look at everything, and it's always the same type of thing. That's why I was talking about the one-stop shop type of thing. So when Zach was talking about, hey, we're gonna have tax loss harvesting, like that's one thing that they can put in. I have loans, I can get cryptocurrency, I can get the Bitcoin card. It's everything that you want to have, so you don't have to go to X, Y, and Z type of places. But there's always a question that does come up, and that is about interest. So the question is, when we have a stable coin or we have Bitcoin or whatever else, and of course it's all about supply and demand, who are you guys lending it out to? Is it insured, which is a very tough question, I know, depending on where it's at. And how does it all work? So break us down, like the process. Of course you can't tell us, we give it to this institution, that institution, but how do we get the interest on what we have? Because let's be honest, the banks are going to give us anything like that.
Nope. Sure.
So the interest is generated via BlockFi lending it to borrowers. So it's a bit different for cryptocurrency and dollars. For cryptocurrency, we exclusively lend to institutional borrowers. For dollars, we lend to institutions and to clients on our platform who are borrowing dollars secured by the value of their cryptocurrency. To answer the question about insurance, a large portion of the assets that are held at BlockFi are custodied with either Gemini or BitGo at any single point in time. Gemini is our primary custodian. We use BitGo for some assets that aren't supported on Gemini, like USDC, for example.
Right.
Both Gemini and BitGo hold insurance policies, that protect our assets and as a result, our clients' assets on their platform. For the assets that are lent out, there is no insurance. What you're relying on there is our risk management capability, which starts with the structure of the loan. So a lot of these loans are collateralized by liquid assets. So if someone's borrowing Bitcoin from us, oftentimes they are securing that Bitcoin by putting dollars in BlockFi's possession. So if the price moves around, they get a margin call, or we're able to close out the position if we need to. And all of that is fully automated in our proprietary risk management technology system, which has operated from the time we made our first loan in December of 17 through to today. And we've had perfect performance with no losses throughout those 2+ years, including multiple periods of pretty extreme volatility up and down. So I think there've been, around a handful of days where Bitcoin's gone up by more than 20% in a single 24-hour period since we made our first loan. And there have, been a couple of days where it's gone down by more than 20% in a single 24-hour period. And throughout all of that volatility, we've maintained perfect performance and continued to iterate on our risk management to make it even better in terms of protection, but also in terms of our client experience, both on the retail and institutional side. So one of the things that's a big difference for us versus DeFi is that we have the ability to hedge out certain risks at the portfolio level and treat certain scenarios with clients differently than other scenarios. So, on DeFi, nobody knows who you are, so everyone's treated exactly the same. And not to say that we do this, but it might be that when Alex is borrowing with his firm Bequant, there might be a slightly different treatment for how much time they have to respond to a margin call, for example, or what LTV level their loan can get to before action is required, versus a single borrower on the retail side of our platform from outside the U.S. So all of these things have been dialed in over time, and the risk has been managed perfectly so far.
Yep. It's one of those tough things, right? Because like we talked about, like the hot new craze is DeFi. And we were on this call and Danish actually brought it up. And he said, you know what? We can minimize these types of risks because we are centralized and because we can do these things. And people say, no, it has to be DeFi or nothing. But if you really look at it and step back and go, well, look what happened to Yam. Look what happened to SushiSwap. Look at all those different things. So, it sounds like, to me, as a small business owner, I look at these things, I'm like, this is fantastic because I don't have to go to a bank. I don't have to do all these, jump through these hoops like we talked about before. I can just collateralize everything, keep my cryptocurrency there. It can appreciate. I can use the money for any kind of overhead that I have, and it works out okay. It's just one of those, just getting used to, I guess, that mentality.
Yeah, and look, the yields are very compelling on BlockFi's platform when
compelling
when compared to traditional, banking products. One other thing I would highlight on the borrower side of the equation, this is pre-DeFi, but if you go back to March, when obviously we had a little bit of volatility to the downside as
by Thursday.
As every market, was digesting the news of COVID. Crypto, in typical crypto fashion, goes down 50% in a single day. Recovers relatively quickly after that, but there were some failures on the smart contracts in terms of how they worked, including on the biggest and most time-tested platforms like MakerDAO, where some folks had their Ether liquidated for like a $0 value. And like if you're working with a company that's regulated and holds a license in your state and a license at the federal level and has principals that live in the US and care about their reputations, the company takes care of you in that scenario. When it's something like a smart contract, they had this hiccup, and I saw somehow there was a decentralized vote recently, and they just said, no, screw it, we're not gonna pay anybody back for that. It's like,
yeah, it's craziness. And they're actually talking about tokenizing real estate and talking about big, massive loans. So one of the questions was, well, if you tokenize a real estate asset and then something happens where you miss a payment, what happens then? It just gets wiped out? Like, oh, well, it's all part of the smart contract. So if those things are written poorly or something happens, then it's all gone.
Yeah.
So Zac, I guess my next question was, how did you guys handle it in March when everything just slipped all the way? Did you have to liquidate, or did you call in and say, hey, if you want to keep this out, either pay back or you have to over collateralize?
I just want to add to that too, because I remember that day. We have a lot of funds that are clients that do loan arbitrage. And I remember being in London then and getting phone calls all of a sudden because it was so abrupt and it was such a steep fall. You had liquidation levels, forget margin calls. Margin calls, people pass that sign in a heartbeat. You had liquidation levels getting their floors blown out. It was really scary. And even if you have, like, your firm or our firm has clients where we have borrows out and they're being loan arbitraged, it becomes systemic. And so that's a great question, Rob. I mean, your risk team must have not slept for days. And kudos to them, by the way, for pulling through that.
So there were a couple of interesting things that happened. So first off, I mentioned portfolio level hedging. So one of the things our system does today is it's constantly monitoring the overall health of the market. And some of the stuff is basic and some of it's a bit more advanced. But to give you a basic example, you just look at things like the amount of liquidity and the amount of volatility. And if that starts spiking up, maybe you pay a bit more attention, right? It gets much more complicated than that, but in certain scenarios, our system might be producing signals to us that would say things are looking, elevated in terms of volatility. And if that's to the downside or the upside, we might take different actions. But one of the actions that we took on that day, if you remember, there was an initial wave of like 25% down, maybe 30% down. And then in the evening, Eastern time, we kind of puked again. We hedged a little bit. It was expensive relative to hedging when markets are calm, but we hedged a little bit at that time. So that helped us to not as urgently need to liquidate clients and to give folks more time. As a general rule, we don't liquidate anybody on the retail or institutional side of our platform without notifications. And we've built stuff in for a long time to exclude edge cases like flash crashes or something like that. You have to be really careful about that kind of stuff as well. So we did that. A lot of our, almost all of our clients were very receptive. We did liquidate some of our clients, but I think it was a smaller percentage of our portfolio than anyone else. And then starting the next day, we were in a position to, continue lending. And for any of the clients that did get liquidated, we gave them a window. We basically extended their margin call window. We gave them a free option basically to reinstate their position if they added more collateral based on whatever the current price was of Bitcoin. I don't know that we'll necessarily, do that long term because, a free option is worth a lot of money and we bore a little bit of that cost, but that's what having a very well capitalized balance sheet enables you to do. You can make decisions where, you prioritize a long-term relationship over a couple $100,000 on a single day. And that following week was one of the busiest weeks we've ever had as a company. We got through the risk management scenario that we were faced with, and then we were the only man standing, lending net new capital into the market for a period of about 5 days. Other folks that we compete with regularly weren't, they were still tying out the risk or sourcing more inventory. We were very actively lending. That enabled us to, improve our margins and grow the business. We won some market share. There were a few folks who hadn't transacted with us before who heard that we were, standing and actively lending, and they, came and became clients. So I wouldn't want to go through it again. It's definitely stressful, and I don't ever like severe downside Bitcoin volatility because I hold a lot of Bitcoin personally, and I'm a big believer in the asset class. So I like it a lot more when the price goes up. But it ended up being, a positive for our business in hindsight.
Yeah, a perfect opportunity to step up and do the right thing. And then everybody, that's the whole thing about having customers. You can do the quick thing, like with some of the DeFi, or do the tough thing, and then actually long-term, everything works itself out. Got it.
Yeah, and that that one show of like good faith really does go a long way, and that's quite impressive. I mean, I was going through that time as well with clients, Zach, so I know how stressful that really was. With the after that it was crazy because that happened 2 months before the Bitcoin halving. And the Bitcoin halving really turned out to be more or less a non-event. And it was odd. It was like people predicting different things and whatnot. And I went on Tone Vase's webcast for the halving eve and all that stuff. And we all just sort of, the halving happened, we all got tired and fell asleep and went to bed. But for you guys actually saw an uptick in your business, and quite a big one at that. What was the rationale behind it?
Well, we did, I think if you look at price action, I think a lot of times you get these bull cycles kind of 6 to 18 months after the halving occurs. And I think there's a view out there that it gets a little bit slower each time for the bull cycle to hit post halving. So we'll see what happens now, but we took it as an opportunity to do just a ton of marketing, and we ran the most aggressive kind of new client promotional offer on the retail side of our platform that we had ever run. And that ended up being pretty successful. And then we've also just, caught a few tailwinds from the broader macro backdrop of, macroeconomic uncertainty, central banks printing more money than they ever have before, which makes assets like Bitcoin more relevant. And so as a result, you have folks like Paul Tudor Jones and others like him starting to participate in the asset class for the first time. And I think because we're a bit more of a known quantity now, we still have more work to do, but because we're a bit more of a known quantity now, we're able to have some of those conversations, and some of those folks end up becoming clients on our platform. So, we've had the best growth months as a company over the last 6 months that we've ever had in our history. And so we want to keep trying to accelerate that adoption, whether it's on the institutional or the retail side, and bring cryptocurrency increasingly mainstream. And hopefully that'll be good for us, but also really good for the industry overall.
Yeah, and one thing about the advertising, I was on the phone earlier with the folks over at Brave for some work stuff, and they couldn't stop bringing up your name, and it just so happens I came across a Cointelegraph article about you, and it mentioned eToro and how successful with Brave advertising you guys have been, as opposed to Google. So it was an interesting read for sure.
Yeah. we were there first. I think we were there's been a couple of ad types that we worked on with Brave, and we did them first, and they've been great for Brave. They've been great for us. And
well, let me tell you, they say your name no less than 20 times in a phone call. So if that's true with every phone call, you're going to get business just from conversations.
Yeah, they were practically advertising for you on the call itself.
But listen, I don't want to take up any more of your time. You've been so generous, and thank you for for coming on with us. For everybody watching, I will, all the description, all the information, all the stuff you need to know about BlockFi is going to be in the description below. So please check it out. I know Rob is going to talk about it more and more on his channel as well, and hopefully have Zac on the El Paso channel. So Zac, thank you so much for your time. Really appreciate it. Rob, thanks for coming on. Ryan, best hair in crypto. All good.
Great talking to you.
No, absolutely. Thank you very much. Take it easy, guys.
Thanks all.